Thank you, and it's great to be here as well. I think when I look at this, and if we go right to my, my title slide here, hopefully I'll press the right button here. When I was looking at how I characterize the near-term environment, I think, as well as looking at the longer term, but really focusing on the near term, I couldn't help but go back to the linkage between forecasting and the weather. And unfortunately, it came a little bit more true for me, and likely it should have resulted in a title change, as I was up in Boyne actually this weekend, and I should have titled this Partly Sunny, Chance of 60-degree Weather. And by the way, when you need to drive home for the SAA conference, we're going to have freezing rain for you to deal with. So it was an interesting travel home, but anyway, I'm here and I'm glad to be here with you. We go right into the presentation. I'm going to take a look through the global current environment, focusing a little bit on the U.S. I think a lot of the comments I have are certainly going to be in lockstep with what we've heard from both Jim and Ellen earlier in terms of where we see things. A little bit on our long-term perspective as well, and then I'll dive into the majority of my presentation. I want to focus on an issue in trends in sourcing and some of the advantages and opportunities really that are here in North America. So a little bit here, and just to put it in a light vehicle perspective, again, I think we saw this with Ellen, but we have come a long way in the global automotive industry. From our calculation, 2012, really we're looking at about 54% of 2012 volume was accounted for by the emerging markets. So as Ellen said, in 2011, we crossed over the 50% mark, and we're not looking back from an industry standpoint. Globally, and we're not quite all reported yet, but globally we're looking for about 81 million units from around for 2012. A few factors I think that we need to consider, and we've heard about these as well, and I don't think any of them are going to come as a surprise, but I think as we look at the setup, as we look through the remainder of 2013, there's really a couple of areas that I think are going to focus, and I'm really trying to use stoplight colors here. We've took liberties, I think, with some of the colors because nothing is really a pure red, yellow, or green here. Maybe the Eurozone is red. I think right now it looks like the Eurozone crisis, or at least the breakup of the Eurozone, has been avoided for the near term. I think we're likely to see issues arise again in the second half of 2013. So that certainly is going to be the area to watch from a risk standpoint in terms of volume for the year. On the positive side, I think if you look at the pace of the U.S. recovery, we're relatively conservative on our view of the U.S., and I think there's certainly some upside potential if we look at where that's likely to end up, and the U.S. could end up being one of the positive points in 2013. Commodity prices in general, focusing on oil, most likely we'll see at least stable, if not slightly lower oil prices and gas prices at the pump, which again I think will support a very positive outlook for 2013. A few of the areas which we'll call subplots I think to consider is certainly what's taking place and likely to really have more of an impact in Asia, both with the economies as well as some market share trends with the manufacturers, is the ongoing dispute between China and Japan. Looking at quantitative easing with the European Bank, if that gets ahead of things, shift in corporate behavior, and by that I mean if we see a more pronounced uptick in corporate spending, again, could be a positive note as we progress the year. And stronger than expected global financial markets could again ignite things a little bit more than what we're expecting currently. When we look at the year and wrap everything up from a perspective of volume overall, we're looking at about 83 million units. It's a very modest increase, a 3% increase for the year globally. This is light vehicles that we're looking at here. I dare use the word stable from a global perspective. When we look at North America, we see things about a 4% increase, nearly 18 million units. Our U.S. forecast is at 15.1. I'll talk about that in a little more detail. Risk areas, as I said, is Europe as a whole. So pan-Europe, we're looking at under 18 million units of global light vehicles, about a 2% decline. Germany down about 2% as well. South America is a push, so we see Brazil roughly at a 1% increase at 3.5 million units. Over to Asia, we're seeing about a 5% increase to nearly 35.5 million units. China remains, from a rounding standpoint, still in double digits with 21 million units. Japan we see at a double-digit decline, really coming off of the eco-car subsidy that ended in September, even though really the fall was still stronger than expected in Japan. So we could see a little bit stronger performance this year. Focusing a little bit on our view of Western Europe, this takes us back quite a ways and looks at the previous recession through the early 90s, which was roughly a 5-year recovery. We're calling this one, and this is focusing on just car sales in Western Europe. We're looking at longer than a 10-year recovery here. So if you look at our line out through our forecast horizon, which approaches 2020, we're crossing over 14 million units of car sales in Western Europe, and that is still about 500,000 units below the level it was at back in 2007. So again, a very long trajectory of a recovery with a lot of risk still ahead. On the production side, looking across pan-Europe for light vehicles, we do expect further declines. We're estimating about a 6% decline when 2012 numbers are all reported, and we see another 4% decline in 2013. And I think it's important to note the dotted line at the top at that 22 million unit level for production. That's representing the level that we saw back in 2007. So we are well below the levels on the production side as well, looking at Europe. A little bit on the U.S. I'm not going to go into all the different buckets here, but we tend to look at 10 different buckets when we're looking at the U.S. of drivers. Our retail sales on the light vehicle sales volume was at 11.7 million units in 2012. We saw 14.5 for the year. We're climbing to 15.1 and a 12.2 on the retail side, with I think more upside potential than risk. I did put a risk in there of about 100,000 units at this point. Key drivers are certainly going to be the economy, the housing market, which we heard from Ellen as well. We think fuel prices is going to be more of a push, so we don't see them having a strong impact. We could get a little bit of an uptick if they do indeed decline over the course of 2013 relative to 2012. Credit availability is less of a factor than it was in 2012, but continues to be a big positive factor, I think, when we look at the overall position in 2013. And that would include higher lease penetrations. We're seeing from a credit standpoint, the average credit score has come down over the last few years as a result of lower credit scores being able to come back into the market, so your subprime buyers coming back in. The percentage increases of C&D credit has grown in 2012, and we would expect that to continue in 2013. Looking over at some of the other sides, really on the OEM side of things, vehicle pricing and incentive levels, that interplay, we see continuing from 2012, that trend into 2013. I still have incentive levels on a red for the industry volume, and what that means is relatively lower incentive levels for 2013. I think there's some risk to having that. We could actually see slightly higher incentive levels, and I think it's going to really depend on a few key segments, and depending on how the year starts off from a volume standpoint, if we get into any type of mini or regional incentive wars. But regardless, we don't see a huge increase or a huge decline in incentive levels in 2013. From a product standpoint, a lot of product activity likely going to drive showroom activity. We see about a 50% increase going from 40 new or redesigned vehicles in 2012 to, by our count, 61 in 2013. So pretty pronounced increase in model activity. We'll see a lot of those obviously around the show this coming week. So I think that's going to help drive the interest back in replacement demand. A little bit around the segments, looking at a few key areas, we do see the pickup segment gaining ground in 2013, and this is focusing on large pickups. We see large pickups increasing about 0.3 of percentage points of share to 11.7 from 11.4. We see a pretty substantial battle going on between the C and D segments in 2013. A little bit of a reversal of what we saw where the mid-sized cars or the D segments gained ground, a pretty substantial ground with a lot of redesign activity in 2012. We see some of that being given back and picked up in the compact segments as those segments are now larger than they were previously. So some pretty pronounced interplay, I think, between those two segments. And I think if you look at the premium market, we see a lot of activity in the premium market. And I would say just look around the show this coming week at the number of introductions, whether it's concept vehicles or production vehicles. We're going to see a lot of premium activity in 2013. So 2013 could be characterized as the year of pickup trucks and the rebound in premium. And I don't think many of us would have thought that just a couple of short years ago. Looking on the production side on the short term for North America, we see North American short-term production coming in just under 15.5 million units, 15.4 for the year this year. We do see a slight increase. It's about a 3% increase in 2013 to 15.9 million units. A lot of drivers. I think the continued resourcing, which I'll talk about in further detail. In the near term, we see export growth slowing slightly. That will pick up, and again, I'll talk about that a little bit more. A couple of questions, I think, as we look at this. Is there further supply chain stress in terms of volume? If we see the increase of volume outpace where we're at right now, are there enough components to really hit these type of numbers? If we get into the mid-16s, I think there's a potential problem in the near term. Longer term, we're obviously in a good position to hit that and well above that. In addition to that, inventory was starting to creep up in the fall. Right now, it's in a good position. That'll be a key indicator, I think, though, of further production actions, either on the increase or the decrease side as we progress through the first quarter. Looking a little bit at the long term. Long term from a vehicle standpoint, and I think maybe Michelle was referring to this slide as one of the trends where you see the bars going up. We definitely have bars going up on this slide, not without risk. We do see the global light vehicle market approaching and crossing over the 100 million unit level by 2016, approaching it in 2015. We see for 2013 about, as I said, about 83 million units. With a fairly substantial amount of risk over the course of the near-term horizon. Much of that is centered around the pace of recovery, if we want to call it that at this stage, in Europe, with the risk of potential decline or further decline there, as well as the emerging markets, not just the BRICS markets, but the other markets that have been growing at a very robust pace. 2013-14, we could see some of those slow their growth rates. Which is part of the risk that we see associated with the red portion of the bar. Talking a little bit about the capacity situation, I think that came up in the Q&A earlier, and this is really our take on it. We do see utilization on a global perspective increasing. 2013, we see it falling a little bit, primarily because of the situation in Europe and the declines in Europe, where Europe's utilization's we expected at about a 65% this year. Once we get through 2013 and out through 2017, we do see utilization increasing and really hitting just under that 80% level, which is healthy from a global standpoint. There are areas of concern. We called out and talked about Europe earlier. From our calculation, there's about 5.5 million units of overcapacity in Europe when we're looking out to 2017. And that does need to be addressed. That needs to be sorted out, I think, before we'll see a return to health across the production base in Europe. In addition to that, it's a different situation where a lot of new capacity has come into China, but we haven't really seen the reduction or the consolidation of the old capacity. So utilization in China is also relatively low over this horizon at a 70% level. Japan, we have seen and expected to see some correction, cutting about 1 million units of capacity, but still over capacity by over 2 million units over this period. Back to the U.S., so we're bouncing around a little bit here, but I wanted to try to bring some of the global perspective into this as well. From a U.S. standpoint, the long-term trend is also favorable, which is consistent with what Ellen said earlier. We see in light vehicles low 17s by the end of our forecast horizon. We forecast 15.1 this year, 15.7 next year. So really stable levels of increase. And then again, I think there's more upside potential in the near term than there is downside risk. Overall, we heard the main drivers, and we're consistent with those, were replacement demand, new household creation, really being the primary drivers. I think when you drop below the top line, there certainly are going to be some issues when we look at segment mix, and that's going to be driven by regulation, going to be driven also by demographic changes. As those millennials exit their parents' houses and start their households and then move into different life stages with families and so forth, we're expected to see segments in the types of vehicles change as well.